Hi, Todd VanDenburg here, VanDenburg Capital Management, and another Uncommon Sense update. So the new inflation numbers are in, and they came in not as bad as the experts had predicted, but still not good. Year over year, inflation's up 8.5%. It was up 9.1% last month. Still really, really not good numbers. Primary driver for the change in inflation is the price of energy has come down a bit, and so that sort of tempered some of the other bad numbers that we've seen. More specifically, the number that's sort of most concerning to inflation to me right now is the cost of housing and rentals. Um, as you may remember, during the pandemic, we had situations where, state, federal governments were basically saying, you couldn't evict people for non-payment, and if you, no matter what, right, you still had to, make your mortgage payment if you had one, but yet your renter wasn't required to give you money. You couldn't raise people's rents really over the last couple of years. So we have this situation where now, as the pandemic has eased, um, housing prices are starting to rise, and over the last 12 months, they've gone up incredibly. And now, as people are buying homes as rentals, well, if you buy a home at a higher price, you drive rents up. Uh, you know, Landlords who haven't been able to raise rents or even collect rent are now raising rents to try to offset 2 years of either lost rent or not being able to keep up with inflation. So uh, the cost of housing makes up a big chunk of the inflation number. So we're going to watch those numbers, pretty closely. It's not all negative. I mean, yes, if housing prices have gone up, which is good for people that own homes because now you have more equity in your home, but it's bad for renters as people buy homes to rent them to people because that forces prices up. So you know not everything's negative in every direction, but it's not super positive for the inflation number. Um, we hope to continue to see gas prices coming down, so maybe that will keep inflation numbers maybe coming down a little more in the coming months. But the one thing I did really want to talk about today and touch on was this new bill that just got passed by the Senate, should be passed by the House unless something unexpected happens. It's called the Inflation Reduction Act. Uh, Boy, talk about a bill that has a name that doesn't reflect the what's actually in it. And this just isn't my opinion. I know in my last update, I said how much I agreed with Elizabeth Warren on her views on something. Well, now I'm going to quote Bernie Sanders. And Bernie Sanders looked at this bill. He still voted for it, but he said that it really isn't going to lower inflation. And that's primarily because, as I've talked about in prior updates, inflation is high right now, not because, as the Fed might think that, interest rates were too low, so they're raising interest rates. But inflation is high right now because basically we pumped way too many dollars into the economy with borrowed money from the future, and at the same time, sort of pushing the economy down, keeping things closed. So we had this ultimate imbalance of way too many dollars, not enough goods and services, and that is the definition of inflation. And until we do something to bring dollars out of the economy, which the Fed doesn't really seem all that interested in doing right now, we don't really see inflation coming down measurably in at least the next 12 months. And it isn't going to be made any better by this new spending bill that the government is about to pass, because again, it's just going to inject even more money into the economy that is already awash with dollars. So for those of you that might think that I sometimes paint a too rosy picture of the world, well, here's your update, because inflation is here to stay for a while. Now, I guess if prices stay as high as they are for the next 12 months and then prices sort of level off, then inflation will go to near zero. But I'm not sort of counting on that. There's a lot of people that are being harmed today because of current inflation rates. Even wages can't keep up with it. While wages are continuing to rise over the past 12 months, wages, real, after inflation wages are down 3% in the last 12 months. So these are all pressures that are sort of pushing on the economy. But we still see the economy continuing to reopen. We still see economic activity continuing to improve. I'm just not optimistic about the inflation rate coming down substantially, at least for the next 12 months or so, as we look at these actions by the government. Because again, if we can't get these dollars out of the economy or significantly increase production of goods and services in the United States, we're likely to see this inflationary environment, for the foreseeable future. So again, not negative about everything, right? As I mentioned earlier, housing prices are up, and if housing prices are up, if you're a builder, you want to build a house so that you can sell at these higher prices. So there are things that are happening that are positive, but not everything's positive, and I'm certainly not as positive as I was, maybe 9 months ago, prior to the government, taking so many actions to insert so many new dollars into the U.S. economy. So while on one hand, again, I'm fairly optimistic about the fact that the U.S. economy will continue to open up, we'll get more people back to work, we'll have more and more economic activity. I'm not optimistic about the inflation rate and what the government's doing to borrow even more money and put even more dollars into an already saturated economy. So the stock market, because economic activity continues to improve, the markets are continuing to go up. They went up pretty well in July, and they're up so far in August. And we sort of expect that to continue, maybe not as much as it was, July was a pretty good month. I certainly don't expect that, every month going forward, but I sort of expect to see gains continuing in the coming months as we get towards the end of the year. There is an election coming up. We're going to start talking more about that in the coming months. And as we all know, or as I've said in prior updates, I'm a huge fan of a divided government. I really don't like it when one party controls everything. And if the quote experts are correct about the upcoming election, we may easily end up with a divided government, and then the government can do less about borrowing more and putting more dollars into the economy, and we can start to try to get all these excess dollars out, and that just bodes for positive after the election. But I'll have more to say about that in future updates. So again, not overly negative, just not a huge fan of where we are with inflation and what the government's doing with these borrowed dollars. And it's just going to likely mean inflation is going to be high. Oh, to end on one positive note, it looks like if things continue as I've said that they probably should, people on Social Security are likely going to get about a 9% increase to their income next year. Because the Social Security Administration in the next couple of months is going to lock in what the cost of living increase is going to be for 2023. And if the current trend continues, Social Security recipients on average will get about a 9% increase. So it's not all bad. I could say something negative about the Social Security Trust Fund, but I think I'll just end on a positive note. So those of you on Social Security, congratulations, you're going to get a pay increase. In any case, that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching.
If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.